You see what they took a big bet not paying up for the FIFA rights going forward, and it worked out for them. Welcome to the Drill Down Earnings, a quick look at the latest earnings from Electronic Arts. This is the business story, but behind one stock on a move, that stock being EA. I'm Futurum Group's Chief Market Strategist, Cory Johnson. Electronic Arts earnings. Look, EA reporting a fiscal year 2024 Q3. So yeah, to the rest of us, December meant the end of the year. For EA, it meant the end of Q3 2024. That's quarter ending December. But earnings are good, I guess. Wall Street likes a beat or a miss. This is kind of a miss and a beat and a miss. It was a miss on sales, a big beat on earnings, but we want to dig into the business here. We want to understand not the miss or the beat, but how the business works. Here's the actual numbers of how the business did. Electronic Arts bookings. They use bookings rather than sales. A lot of the revenue is deferred. It's a better number to understand what's happening in the quarter. Those up just 1% year over year to $2.366 billion. Profits, $290 million, up 42%. So the model is working, but let's dig a little bit deeper beyond the headline numbers. EA's gaming titles, FC 24, Madden NFL, Star Wars, Jedi Survivor. But yes, I think the big story here is EA Sports FC. It's EA building a soccer title. Some people would call that football. I don't know. But it's no longer holding the license of FIFA, which was so many years a dominant brand for them, their best-selling title. Now they're just selling FC 24, and guess what? It's doing great. Sales up 7% year over year, better than the overall business, pulling up all the rest of EA. And what is the stock doing after hours? Down a little bit, not a big deal. Trading about 135 after closing about 137. But not a huge year for this company. In the year, the stock vastly underperforming the S&P 500, up 6.7%. Not a great year for EA. I think after COVID, the game usage still coming down when you look at that 1 year chart. But when you look at what's really going on in the company, what does intellectual property mean to this company that has spent so much in licenses so many years? And what are we to learn from the success of FC 24 without the FIFA title? Here's the CEO, Andrew Wilson.
As a core entertainment company, it is always important that we are developing and investing in new IP to grow the future pipeline opportunity, that optionality that Stuart referred to earlier. And we have the strongest pipeline I think we've had in many, many years as we go into those out years in terms of both our core IP and new IP. If we look at the trailing 12 months, both in terms of engagement and monetization, what we do see, however, is that the biggest gains are these games that really entertain and engage massive online communities. And these are existing franchises that either evolve on a month-by-month cadence or evolve with annual releases plus live services. And so as we think about the foundation of growth for our business, we think about FC. Again, this was the first year of FC branding. What we've spoken about in the past few quarters is having that FC branding and partnering more closely with the core leagues in territory gives us more growth opportunities than we believe we ever had before.
So it seems to me that they've got some leverage that they didn't have before when they're negotiating with all these titles, when they've got to pay extra to keep their Madden title or their Star Wars title. Maybe when they grow an audience and so many of the games are being played online that they know and hold that audience, the great game design and great gameplay and an audience of players maybe can lower their licensing fees over time. We shall see. Sounded like Andrew Wilson does think that gives them some leverage going forward. All right, what does it all mean? The big drill down earnings takeaway and the drill down earnings bite, one number that tells us a whole lot. We'll have all that right after this.
It's brought to you by the Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
All right, so here's your takeaway. Electronic Arts, kind of a punt for the quarter on the top line. Bookings up 1% year over year, but profits up 42%. So for a company that says we're going to make more money in the bottom line, even though the top line's not moving a lot, and more free cash flow, yeah, they saw a lot of that. So really successful model, great management of this business, even when it's not growing too much. And you see what they took a big bet, not paying up for the FIFA rights going forward, and it worked out for them. FC24 growing at 7% year over year. Very profitable and very good for this business to show they can grow football, soccer, whatever you want to call it, without the FIFA title on the book, on the top of the cover, on the download, whatever you want to call it. And I promised you, the Drill Down Earnings Bite, one number that tells us a whole lot, 16%. That's your number. What's that number mean? 16% of EA's revenues were on mobile. $307 million in the quarter that just ended. Now, that's not a record for the company. Mobile, on a trailing basis for the last 12 months, also at 16%, but that was 13% in the fourth quarter of 2021. So slowly we see mobile taking a bigger chunk of revenues at EA. All right, that's it. Thanks for listening to Drill Down Earnings about EA, a quick look at what's going on in the business behind that stock, a little bit on the move. I'm Cory Johnson, the Drill Down Earnings part of the 6-5 Media Group.